Hey, welcome back to the channel. I'm Jason Wood, the VA loan guy. Today we're going to show you how you can use your VA loan more than once. That's right, you can use your VA loan multiple times. You can even have more than one VA loan existing at one time. So I'm going to walk you through exactly how we're going to do that. So today we're going to talk about your entitlement, how that works, how to restore your entitlement, what bonus entitlement is, and how to do the math to know how much VA loan you can get to have more than one VA loan at a time. So first thing to understand today is your VA loan entitlement. What is that? So the VA provides a 25% guarantee to the lender in case you were to default. So it's 25% of your loan amount. Well, that is deemed entitlement. That's the term that's used for that, and it's a number that's allocated to you on your certificate of eligibility. So the next thing we need to understand is, what is that certificate of eligibility? Your certificate of eligibility is basically your golden ticket to get your VA loan. So after you've completed the required amount of service to be eligible for a VA loan, you now have your certificate of eligibility. And if you have an existing VA loan already, it will tell us how much entitlement has been allocated towards your existing VA loan on your certificate of eligibility. So understanding how to replenish your entitlement is the key to unlocking the very valuable use of the VA loan to create a real estate portfolio. So what we're going to share with you is how you can replenish that. And there's a few different ways you can replenish your VA entitlement so you can use your VA loan again with no loan limits. So remember, in 2020, the new law that passed, which was the Vietnam Veterans Blue Water Navy Act, that allowed us to have no more loan limit. So if you have an existing loan, that rule changes. But for the moment, we're going to talk about having no existing VA loans, and sky's the limit as far as how much VA loan you can have based on your qualifications. So how we can replenish entitlement. Let's assume we have a house right now with a VA loan on it. Next, we're going to get orders, PCS orders to a new duty location, and we're going to go to a market that is pretty expensive, and we're going to need the full power of this VA loan. We need to be able to go purchase in a market like Hawaii or San Diego or Norfolk, where we need to have the ability to purchase a more expensive home than some other parts of the country. So what we're going to do is we're going to look at replenishing your entitlement on the current house. So let's say you're in your house right now, you're going to PCS. Before we move out, what we're going to do is we're going to look at refinancing opportunities. If you've been in that house more than a few years, you likely have enough equity built in there to where we can do a conventional refinance. So refinancing that loan into a conventional loan while it's still your primary residence will now free up your VA entitlement. It will replenish the VA entitlement, so now you can go use your VA loan another time. Likewise, let's say you didn't want to keep this current house, you just wanted to sell this house and go buy a house at the next duty station. That's okay as well. By selling your home, that will replenish all your VA entitlement. So now in the next duty station, you'll have 100% of your entitlement available to you again with no limit on the loan. So buying that new home with your restored entitlement is going to be the same process as when you purchased your home for the first time. So now that we've either sold or refinanced that departure residence, we're now able to use our VA loan, go through the pre-qualification process, and we have our entitlement already restored, and your lender can help you actually with that restoration process, because sometimes there can be a few days delay there. So a good VA lender will understand how to get that through the VA a little bit quicker. Oftentimes we've had many transactions that were almost simultaneous, where we're closing on one and closing on the new one the next day. So getting that entitlement restored in a quick moment is really important to have the right lender to put that together for you. But now you can move forward and buy that second house with your VA loan with no limit. So now you can move to that more expensive market, get that house with zero down payment. You can rinse and repeat this process, which is one of the main strategies a lot of military members use to grow a real estate portfolio. Every time they PCS, they purchase a piece of real estate. It doesn't have to be the forever home. In fact, it shouldn't be the forever home. It should be a home that will look and be a great rental property in the future when you finally depart that residence. So now as you PCS 5, 6 times maybe in a 20-year career, you will have amassed quite a few different homes, all with tenants paying the mortgage for you over the years and paying down that mortgage balance. So one day when you retire, you're sitting on a heap of equity and also some good cash flow numbers to help you in your retirement years as well. So as you move into buying that next house and you've replenished your entitlement, the process is going to be the same from a paperwork standpoint as well. You're still going to provide paperwork based on your income, your assets, your credit, and the lender is going to determine how much loan you can qualify for in this new market. Your certificate of eligibility will be repulled, and it will show now that you have no entitlement outstanding against you, so we can go to the maximum effort that the VA loan allows you. So as you make this transition from one home to the next, there are some tips that will be helpful for you to make this transition seamless. Number one is good planning ahead of time. So at the moment that you understand or get word of where your new orders are going to be cut, now is the time to start exploring your options, whether you're going to keep this house or you're going to refinance this house. If the plan is to refinance it, then you need to get with your lender and begin that refinance process. It would also behoove you to be looking at using the same lender for the purchase transaction as well, because having an understanding and knowledge of the refinance transaction, what those numbers are going to be and the timing of it is going to be important for the timing and understanding the numbers on the purchase going forward. So as they build your refinance, they can also be using all the same documentation to build your pre-approval on the new VA loan. So not only will you know exactly what the refinance is going to look like when it's completed, but you'll also have a good insight as to what the new VA loan is going to look like at the new PCS duty location. So it's important that we have proper planning. Also to get things packed if the military is going to move you, and understanding all the time consequences that are involved in that, when you might have leave so you can go physically visit the new properties, or whether you got to do it all over video. So having proper planning ahead of time is going to be super critical and very important to having success in this transition to the next duty station. It's also important to budget for unexpected expenses. There are going to be moments in this transition in your move where some unexpected costs may come up. So it's important that your planning is done ahead of time. If you are purchasing in a new location with your spouse and your spouse happens to work, does the spouse have a new job at the new location lined up, or do they not, right? That's going to be an important piece to understand for the new loan and the qualifications on it, and making sure that the lender is clued into what those plans are as well. But these unexpected budget exceptions can happen with your move, whether it's additional moving expense, maybe it's additional time in an Airbnb or a hotel longer than expected. There can be some things that pop up that you might need to be prepared for. So it's important that you're having some savings and ready to move forward with it. All right, so having more than one VA loan simultaneously. So this is a question that comes up a lot, and understanding the math behind this is really the secret sauce to understanding how you can have more than one VA loan at a time. I have several clients who have 2 existing VA loans at a time, and a couple that have 3 VA loans existing all at one time. So it is a math equation that is unique specifically to the VA loan. So here's how we do it. We had mentioned earlier what VA entitlement is. That represents the 25% guarantee that the VA has provided on that loan in case of a default. So when we pull your certificate of eligibility, we will see the outstanding entitlement. So for example, let's say you purchased a home with your VA loan. Now you're getting PCS orders, you're going to a new duty location. You want to use the VA loan again to purchase in the new duty location with 0 down payment. But you also want to keep the other house on a VA loan. Maybe you got a really great rate, maybe it just makes sense. But here's how the math works, and we'll illustrate this and show you exactly what the numbers look like. So we're going to pull your certificate of eligibility, and on your certificate of eligibility, it's going to show us how much entitlement was charged to the current or existing VA loan. So the first step we need to do is look up the county loan limit. So we're going to use San Diego County as our example. So we're moving from Florida, where they purchased their existing home, and they're going to PCS to San Diego. Well, in San Diego, in 2024, the county loan limit is $1,006,250. Now that we understand what the county loan limit is in San Diego, the VA says it's going to provide a guarantee of 25% of the county loan limit. So 25% is going to provide us with an entitlement number of $251,562. Now on the existing home that they purchased in Florida, they have outstanding entitlement already of $85,000. So we need to subtract $85,000 from this new net entitlement number. That gives us $166,562. This is our new available entitlement for a purchase of a home in San Diego County. To know how much home we can purchase, what we're going to do is we're going to take this number, 166,562 times 4, which gives us a new loan amount with 0 down, $666,250,000. So this is the new 0 down loan amount in the new county they're PCSing to. If they want to go above this, every dollar they go above this, they need to bring in 25 cents for down payment. So if they wanted to purchase a home that was $766,250, their down payment would equal $25,000. Next, what we're going to do is we're going to look at the county loan limits for the county in which you're planning to move to. And yes, I said that right, the county loan limits. The unlimited cap on the VA loan is no longer in effect in this situation. So we have to refer to the county loan limits now and look that up for your county. Now the VA says they will provide a 25% guarantee for the county loan limit in the new county. So we're going to do that math and see how much 25% is of the new loan limit or the new county that you're moving to. Now that we have this number, the new 25% entitlement guarantee number, we need to look at the entitlement that's already allocated on your previous home. So we pulled your certificate of eligibility. We see this number here for your entitlement that's already been allocated towards you. We've done the math over here where we can see what 25% of the county loan limit is in the county in which you're moving. Now what we do is we take what's available in the new county and subtract the existing entitlement. So we're going to have a net entitlement number. This is now the new guarantee available to you in the new county where you're moving to. We can, in order to figure out how much loan that avails you to at zero down, remember it's a 25% calculation. So we would just take that number, multiply by 4, and now we know exactly how much home you can buy in the new county with zero down payment. But it doesn't end there. You can actually go above this number. And it works exactly how the old VA loan county loan limit calculations used to work, which is, let's say we have established the new purchase price in the next county, and you need to purchase something that's more expensive than that. Let's say the home that fits you in your budget and your lifestyle that you need to purchase is $100,000 more expensive than this new calculation we came up with on the entitlement calculations. What the VA says is, hey, we will guarantee you up to that new calculated limit. That's where we stop as the VA. So if you want to go over that, no problem. If you qualify for it, the next piece is you have to self-guarantee. So the VA says for every dollar you go over our new calculated limit, you have to bring in 25 cents as a down payment. So in our example, where we're trying to purchase a home that's $100,000 more than the number we just calculated, your down payment requirement would be $25,000. This brings to question whether or not another VA loan is the right loan for your move. And that's going to depend on a lot of factors with interest rate, available down payment, and so forth to determine whether or not VA twice is going to be the right combination for you. It could mean that keeping the existing house on a VA loan and using a different loan product might be the answer. But if you wanted to know how to do that math, that's how you do it. Now, for the people who want to have more than 2 VA loans simultaneously existing at once, the math works the same way. So now we're going to pull the certificate of eligibility, and we're going to see 2 homes listed on there with entitlement allocated. We're going to go through the same process I just walked you through with finding the county loan limit where we're moving towards, the 25% calculation, subtract all the used entitlement, and now we have our new net entitlement number. I will tell you, if you're active duty and you're looking to pull this off, it is more likely possible to have multiple VA loans at once if you are in the Air Force or the Army as compared to the Navy or the Marine Corps. And the only reason for that is many of the Marine Corps and Navy installations are near coastal cities. And in the real estate world, coastal cities are typically more expensive in the housing market, whereby a lot of the Air Force and Army bases are typically not in as great of a desirable area when it comes to real estate. They're kind of more in the middle of nowhere oftentimes. So you can find homes that are just at lower price points in those markets. So that's why sometimes those branches of service might have a little bit of a leg up in being able to have more than one VA loan at a time simultaneously. But it's not impossible, and you don't have to be active duty to do this either. I have a client who is a Marine veteran and has 3 VA loans all simultaneously. Bought his very first house when he got out of the military, turned that into a rental property, then bought his next home, 0 down payment on both of these homes, and outgrew that home because now they started having a family, so they needed the family home. So within the same general metro area, bought the family home. It did require a little bit of down payment, but they ended up with 3 VA loans on all of them. The really cool benefit to this is when interest rates really dip down low, they're able to leverage the VA IRRRL and reduce the interest rate on all of them. So the 2 properties that are rentals now just increased cash flow because they are able to use this really great program. So that is one of the reasons that a lot of people will try and have more than one VA loan simultaneously. If you found this information helpful, give us a like and a subscribe. Share this with your friends and family. If you have any questions, please drop them in the comments below. We're excited to help you with this. And if you need further explanation, just reach out.